Welcome to Illuminati Silver. We tell you the truth about silver. Today is Saturday the 29th of August 2020 and we're publishing our gold and silver weekly update for the week ending the 28th of August. Gold rose $24 last week from $1,941 to $1,965, having hit a high of $1,976 and a low of $1,903. So a rise overall of 1.25%. In sterling terms, gold finished the week at £1,471. That's actually down £11, showing the strength of sterling against the dollar. And in euros, it closed at €1,650. That's up €5. Silver rose 73 cents. From $26.80 to $27.53, having hit a high of $27.95, so nearly touching $28, and a low of $26.11, a rise of 2.7%. In sterling terms, silver closed at £20.62. That's up 15 pence, or 0.7%, and in euros it closed at €23.13. That's up 0.41 euros, or 1.8%. The gold to silver ratio fell from 73.3 to 1 to 71.4 to 1. Bitcoin, incidentally, is down around $95 at $11,479. Now, the Dow Jones closed on Friday at 28,653. Now, that's up 161 points on the day and up quite an impressive 750 points on the week. The S&P 500 closed at 3,508, up 23 points on the day and up 111 points on the week. And the Nasdaq closed at 11,695, up 70 points on the day and up 385 points on the week. Moving to the oil sector, Brent crude closed at $45.81, up $1.46, and WTI crude closed at $42.97, and that's up 63 cents on the week. The dollar index, weakening again, stands at 92.37. That's down 0.87 points on the week. Now, listeners to our channel will have picked up that we quoted just over a week, maybe 2 weeks ago, to expect the dollar to actually fall. And whilst we didn't think it was certainly going to be imminent, it's possible, it'll be tough, but it's possible to see the dollar index fall below that magic 90 figure. So we're not ruling that out. We're not convinced it's going to happen quite yet. It may be some time. But there is certainly at this moment downward pressure on the US dollar, which of course is only good for gold and silver. Now, our conclusion from last week's video was a continuation of consolidation with some downward movement subject to news or more or less stimulus ahead. Well, this is exactly what we had really until Thursday, when Jerome Powell, the Fed chair, announced that the central bank will tolerate inflation levels above their much vaunted target of 2%, without therefore necessarily raising interest rates to prevent that figure being breached. Now, it did admittedly take quite a few hours for the markets to digest this information. Really, this signalling that interest rates are not going to rise for a significant number of years. Some have suggested up to 5 years, and others rates will never rise. We don't concur with that latter point, but it is feasible that we may find our rates at these levels for some quite considerable time. So when the markets did eventually digest the news and its implications, then we saw the rise in gold and silver prices that we personally had expected to happen immediately after the announcement. So the question moving forward is, of course, where are we now and where are precious metals likely to move short term? As I think it's fair to say that we're all convinced that the medium to long term is all but guaranteed to be in an upward direction from current levels? Well, as far as gold is concerned, and the same really applies to silver at this stage, the dollar moved lower on Friday despite rising US yields, which helped to pave the way for higher gold and silver prices, and are likely to do so into next week, we would suggest, though there was a slight pullback late on Friday. Now, we also mentioned that Thursday and Friday would be important data days, and whilst the weekly jobless claims remained above 1 million, US consumer spending increased by 1.9% last month, according to the Commerce Department. The July gain marked the third straight monthly increase in consumer spending, which is seen as the primary driver of the US economy. But the 1.9% also represented a slowdown from the previous 2 months. Now, Friday's report from the Bureau of Economic Analysis also showed that personal income rose 0.4% in July after 2 months of declines. This represented, just for those interested, in some $70.5 billion. Now, some argue that the decline in the growth is the result of the more recent spread of COVID-19 and the concerns over stimulus checks either reducing or being potentially abandoned altogether, thus affecting consumer confidence. So whilst it was positive, its growth rate has declined. Now, from a technical point of view, target support for gold is seen near the 50-day moving average at $1,880. Short-term momentum has turned from negative to positive, and the RSI, the Relative Strength Index, has also turned higher. Now, there is, of course, psychological support at $1,900 and considerable support at $1,800. But 1880 seems to be where the action is unlikely to dip below unless there's a major change in sentiment. Now, we are also quite confident that the psychological target for gold now is $2,000. It's already been breached, but that is where traders are going to be rather tempted to push prices from their current levels. And $2,100 will then be their next goal on the radar. That said, there will be a lot of vacillation between those lows already mentioned and those highs already mentioned. Silver performed better than gold, which is why the gold-silver ratio fell almost 2 points. The market, in truth, is uncertain on the floor for silver, though to be fair, $26 seems to offer quite reasonable support, with some, not many, some analysts expecting silver to eventually dip to $24. In other words, $24 is really seen as hardcore support underlying the current prices. Again, $30, like $2,000 for gold, is the psychological target. But there, once more, are plenty of resistance points between the current level and $30. Now, before Powell's announcement on Thursday, we would have been quite happy to suggest that we shall see silver range-bound between $26 and $28. However, after the announcement, we are expecting an attempt at least to push silver above $28 very soon indeed, and then much really depends on the momentum as to whether it gets up to the $29 and $30 quickly or perhaps slightly longer term. Now, looking at economic data announcements for this coming week, on Monday we have nothing specifically scheduled. Tuesday, the IHS Market Manufacturing PMI final for August and the ISM Manufacturing Index for August. We have construction spending for July and motor vehicle sales for August, so an interesting day. On Wednesday, we have the ADP employment report for August, which should give us some guide towards the non-farm payrolls on Friday, and we have the factory orders for July. On Thursday, we have the trade deficit for July, productivity revision for quarter 2, unit labour cost revision for quarter 2, and of course, the inevitable weekly jobless claims. And we shall see if they remain above that 1 million level or not. Now on Friday, non-farm payrolls for August, the unemployment rate and average hourly earnings all for August. So similarly to last month, we have the 3 important job data announcements all in 1 week. You may recall when the last non-farm payrolls were announced, we indicated that September's announcement, i.e. the one this week coming, which represents the figures for August, would perhaps be more reflective than the previous months, as the data is collected generally to the middle of the month, and really the last figures, in our view, failed to take into account some of the more recent closures or reclosures of businesses due to the pandemic gaining additional ground. So this announcement could be both more impactful and reflective of the true employment or unemployment position. Now, early in the week, we published a number of quite important videos which contained, we think, a rich amount of explanation as to what is actually happening within the banking industry and precious metals. We draw your attention specifically to yesterday's video entitled Gold and Silver Rise as Interest Rate Implications Are Digested, which was really a continuation of Thursday's video entitled Fed Could Keep Rates at 0% for 5 years or more. Not forgetting the one we produced on Sunday entitled Gold and Silver Prices Driven by ETF Demand. And we've placed links to all of these in the description box below to save you looking them up if you haven't had an opportunity to listen to them. Now, there are some events which are currently occurring that we should all be mindful of. The US is reporting a minimum of 40,000 new coronavirus cases a day, but perhaps and arguably more importantly, in excess of 1,000 deaths literally every day. This suggests that by the time the election in November takes place, more than 250,000 people will have died from coronavirus-related cases in the United States. We are seeing a number of states restricting reopenings and some areas closing again, and we haven't even entered into the winter season as yet, where most of the medical experts are predicting that things could get worse. Secondly, hurricane activity such as Hurricane Laura is wreaking havoc in some states, and there are indications that there could be more to come. Even the headlines today state that 400,000 homes are without power in Louisiana, with so far 10 people killed there and 4 in Texas, with up to 8,000 homes destroyed. In other countries, it's also reported that the death toll in Haiti has risen by 10 to 31, and 8 people are missing. The country's Civil Protection Service reported that fact, and that more than 6,000 homes were flooded in the country concerned. 4 people are known to have died in neighbouring Dominican Republic. Cuba suffered damage but did not record any deaths, and in Jamaica there were reports of landslides and flooded roads, and the US territory of Puerto Rico was also hit. Social unrest in the United States adds further to the difficulties encountered with a 50,000-strong march in Washington, D.C., demanding racial justice and urging people to vote. So none of this is really going to help their respective economies or the global economy at large. So moving into this next week is going to be quite interesting. A lot's going to happen with as far as we're concerned, with the employment data. But we suspect that Powell's comments on Thursday are really a guide to what we are to look forward to, if that's the right term, this coming week. We suspect that precious metals will gain a little more traction because, of course, the Fed's announcement almost that they are allowing inflation to rise above their targeted level. That's certainly undermining the US dollar, as there is now at least appearing to be very little support for it in terms of central bank intervention. So do not be surprised to see both gold and silver rise early next week, but again we suspect most of the activity will be destined towards the latter end of the week, rather than the beginning. Although perhaps Monday's opening will be quite interesting to see how traders have digested the rise on Friday. Clearly equity markets are once again on a tear, and that may also follow through. And as we've stated on numerous occasions, we think the real rise in gold and silver prices will occur when those equity markets start to take a considerable hit, not necessarily all in one day, but certainly over a period of weeks and months of steady, regular declines. But we're not quite in that environment as yet. What do you think? Do share your thoughts. If you haven't already done so, please subscribe to the channel and press the bell sign so that you're notified of our videos as and when they're published. Meantime, stay safe, stay happy, and let's hope that next week and every week thereafter will be a prosperous one for us all. We hope you have found this video interesting and informative, and if so, please give it a thumbs up and share it on social media. Please ensure that you have subscribed to our channel and press the bell sign so that you are notified of any future videos. Also, kindly visit our website at illuminatisilver.com, and if you haven't already done so, please subscribe either as a free or paying member for regular email updates and offers. Disclaimer: Illuminati Silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.